If you're a trader or a speculator, God bless you. I respect that. I was a trader and a speculator. It makes money. If you know how to do it well, God bless you. But for investors and for family offices or high net worths or middle class that are thinking longer term to protect themselves against the open death of their purchasing power of their currency, gold's longer term trend is up and to the right. So if you're looking at a window of more than 3 weeks or 3 months and you're thinking long term, the trend for gold and the actions, not the words, but the actions of the gold market speak so loudly that my biggest fear right now, Kai, is I have too much conviction in gold. I look at gold as a reserve asset, a savings asset. I look at the US dollar as a spending asset. If I need liquidity, dollar's king. If I look at purchasing power and reserve status, gold is king. And I'd rather have a crown of gold than a crown of paper.
MatthewPiepenburg, a partner at Greyerz Gold, a renowned precious metals advisory firm, offers insights into the enduring appeal of this timeless asset. While acknowledging that gold may face short-term volatility, particularly during major market downturns like 2008, Piepenburg emphasizes its remarkable resilience. He argues that even if gold experiences temporary declines, it typically rebounds faster than other assets, underscoring its long-term value proposition. Recent market data supports this view. Despite a modest 0.5% dip last week, bullion has quickly rebounded and now hovers near all-time highs. Year to date, gold has surged almost 20%, largely driven by anticipation of potential Federal Reserve rate cuts. This bullish sentiment is further fueled by easing inflationary pressures, bolstering policymakers' confidence in their ability to lower borrowing costs. As the focus shifts to the cooling labor market, gold's economic landscape appears increasingly favorable. A notable trend Piepenburg highlights is the growing appetite for gold among central banks, particularly in Eastern nations. This shift has gained momentum since 2022, when the United States' decision to freeze Russia's foreign exchange reserves effectively weaponized the dollar. In response, many countries have been reducing their U.S. Treasury holdings while bolstering their gold reserves. Recent data from the World Gold Council corroborates this trend. In June, gross purchases of gold by central banks reached 31 tons, up from 23 tons in May, with net purchases amounting to 12 tons. Emerging market central banks, notably the Central Bank of Uzbekistan and the Reserve Bank of India, led this charge, each adding approximately 9 tons to their reserves. Please tune in for our exploration of MatthewPiepenburg's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I mean, the volatility we saw and everything else was off the charts, and the VIX to the futures and the Nasdaq, certainly the Nikkei, and certainly compared to Bitcoin. That said, and we've always agreed that gold is very sympathetic in a market sell-off. Everything goes down in a lower tide, but comparatively, it did far better. I never look at gold day to day or month to month, frankly, even quarter to quarter, because I'm looking at it in a much more longer-term trends. There's this guy, Henrik Zeberg, I think, out of Scandinavia, who says gold's going to go way down in the next market crash like it did in 2008. Again, I could be wrong. I'm certainly biased in favor of gold. I think we all are watching this, and certainly you and I are. You could argue on the negative case that gold is just another asset class that tanks when the tide goes out and it's sympathetic to the markets. But even if that were true, even if you take the '08 template, it rebounded much faster than everything else. Gold, as we all know, can be used when you need to make a margin or you need to pay for the losses in your bad investments. You sell off your good investments. That may sound like an apology for gold, but more importantly, I think 2024 is very, very different than 2008. And we can get into all the kind of technical charts, and we can get into all the comps historically, but let's keep it, I think, relatively simple, because the simple stupid is so simple right now. And these are things that aren't making the headlines, but are absolutely massive in favor of where gold's longer term direction is going. And I think one of the most obvious is just the Bank of International Settlements. Not my favorite place to be, not my favorite people. If we did a show just on what the BAS does, it would make people very nervous. And they're immune from prosecution, immune from taxation. They live very well doing a lot of bad things. But even the BAS, they're politics. They're political, and they know what they see. The writing on the wall with the U.S. dollar. And just last year, which very few people understood, the BIS made gold a tier one asset. The only other tier one asset in the BIS is the U.S. Treasury. Why did that happen? It's not a coincidence, because the BIS knows what the BRICS know, that no one wants to use the dollar anymore, the U.S. Treasury, as a reserve asset. It's a liquidity asset. But to save and store value, gold has just been elevated to a tier one asset. Okay, that's a very important headline in and of itself for the longer term direction of gold, not the chart that happened in the week of August 5th. The other obvious thing is Eastern central banks. Again, since 2014, no one's been noticing. Eastern central banks in general have been net selling U.S. treasuries and net buying gold at historical records. Again, why? Why are they dumping U.S. treasuries and buying gold and then increasing that since 2022 when we weaponized the dollar and took the FX reserves away from a major power like Russia, which is in bed with China and selling oil back and forth to each other in yuan? Why is that happening? It's not a coincidence that the world and the central banks, watch what they do, not what the pundits say, are dumping treasuries and stacking gold. You've got 30 nations in the last year and a half who've been repatriating gold out of the COMEX and the LBMA banks. Why? Because it's a tier one asset. Gold is becoming far more important as a net settlement trade asset. And so you've also got the COMEX and the LBMA banks seeing massive outflows of physical delivery because people don't want to play the churn and extend game. They want their physical assets. You've got 45 nations trading outside the US dollar. That's not going to change the FX power of the US dollar overnight, but it's a clear and obvious trend away from the US dollar. You've got the oil trade trading more and more outside of the petrodollar. Again, Saudi Arabia, the UAE, they're pegged to the dollar. They don't want to see the dollar die, but they are moving away from the dollar. The UAE and Saudi just joined the BRICS, and they're making deals with other countries to sell outside of the petrodollar. It has a massive impact on the US dollar. No one is really talking about that. The rise of the Shanghai exchange is now the third largest exchange behind the COMEX and the LBMA banks. And even the IMF, and along with the BIS, are already again talking about using gold to back the new central bank digital currency that they're going to try and unleash when things really hit the fan.
While acknowledging short-term fluctuations, Piepenburg emphasizes the importance of viewing gold through a wider lens. Historical data supports this approach, revealing that despite periods of sideways movement, gold has consistently demonstrated its ability to surge significantly during times of financial uncertainty. This pattern reinforces gold's reputation as a reliable store of value over extended periods. Recent market activity reflects this complex interplay of short-term volatility and long-term potential. As of Monday's early Asian session, gold prices experienced a modest dip, trading around $2,430. This slight downturn can be attributed to a modest recovery in the US dollar, which typically moves inversely to gold prices. However, market analysts suggest that the downside potential for gold may be limited, particularly in light of escalating geopolitical tensions in the Middle East. The ongoing conflicts in the region continue to fuel demand for safe haven assets, with reports indicating an intensification of hostilities. This geopolitical uncertainty is expected to maintain upward pressure on both gold and the dollar. Despite the initial dip in early Monday trading, the gold market quickly showed signs of resilience, turning around to display positive momentum. This rapid recovery aligns with the broader sentiment among many market observers who anticipate continued upward movement for gold over the long term. Let's get back to the interview.
Well, look at the world is doing. Look what the BRICS are doing. Look what the BIS is saying. Look what the IMF is saying. Look what the petrodollar is doing. Look what's happening in the COMEX and the LBMA markets. They're all preparing because they see that army marching across the river. They're stocking up. They're loading up in gold because that is going to be the new reserve asset. It already is under the BIS's terms. It already is under the BRICS actions. It already is even in the Gulf oil states. And the price of oil is far more stable when there's gold backing than which is dollar backed. So it's not even anymore in the best interest. These are the longer term trends, Kai. They're so obvious and not gold bug sensational that aren't being discussed by the Fed naturally or by Goldman Sachs or JP Morgan or even Credit Suisse because we can get into that. There's a vested interest in not seeing gold rise. But again, get away from the daily charts. This is not an apology for gold's down moves. Of course, it doesn't move in a straight line. But look at the historical charts. Look at the longer term trend. Gold can go sideways for years and then rip north. And to Rick Rule's point, it will reward extravagantly, infrequently, but extravagantly. But look at history more than daily charts. If you're an investor looking at 5 or 10 years instead of 5 or 10 minutes in a tweet, gold is very obvious. If you're a trader or speculator, God bless you. I respect that. I was a trader and speculator. It makes money. If you know how to do it well, God bless you. But for investors and for family offices or high net worths or middle class that are thinking longer term to protect themselves against the open death of their purchasing power of their currency, gold's longer term trend is up and to the right. So if you're looking at a window of more than 3 weeks or 3 months and you're thinking long term, the trend for gold and the actions, not the words, but the actions of the gold market speak so loudly that my biggest fear right now, Kai, is I have too much conviction in gold. It makes me too confident. I've never, as a lawyer thinking left and right or both sides of the argument, I've never been this confident about an asset class longer term. The short-term moves, I mean, again, we have clients in 90 countries, Kai. They never call us whether gold's at all-time highs or retracing. They never call us to ask about the gold price because they invest in gold as a wealth preservation asset. Also, by the way, it outperformed the S&P total return in the last 24 years. Doesn't make the headlines either. Even as an optionality for return, it's outperformed year over year.
But that's ex-dividends, I think.
Yeah. Well, exactly. But it's still, we don't look at, though, as a speculative asset. We look at it as currency insurance for openly dying currency, longer term. And the world, the BIS, the IMF, the BRICS, China, Russia, Saudi Arabia, they're all looking at gold too. Don't underestimate why, and don't underestimate the implications behind that. And if you think the US dollar is immortal, you're right. It is immortal. It's not going to die. The British pound sterling didn't die. You know, the prior world reserve currencies didn't die. They just got weaker and repriced. And I think gold is going to be revalued. I know it is. It already is. But the daily moves, I'm being honest, I don't care about the daily moves because I'm looking at the historical moves and I'm looking at the historical death of the US dollar and other fiat currencies since we decoupled from gold in 1971. It is an historical fact that they've lost greater than 95% of their purchasing power when measured against gold. I look at gold as a reserve asset, a savings asset. I look at the US dollar as a spending asset. If I need liquidity, dollar's king. If I look at purchasing power and reserve status, gold is king. And I'd rather have a crown of gold than a crown of paper. So I save in gold and I spend in dollars or francs or euros, depending on where I am.
The current market dynamics underscore the complex factors influencing gold prices. While currency movements and immediate geopolitical events may influence short-term fluctuations, the long-term outlook for gold remains bullish. Investors increasingly recognize gold's role as a hedge against economic uncertainty and currency devaluation. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.